Well, the buzzword at the moment is TCS, and this is because of the increase in levy to 20% when it comes to TCS on credit card spends, which is used for international spends. Now, let's try and decode that step by step. First up, let's try and understand what is TCS. TCS basically stands for tax collected at source, and this is a way or a medium for government to collect the taxes. Now, tax collected at source comes under section 206 of the Income Tax Act, and it is a tax payable by a seller which he collects from the buyer at the time of sale of goods or services. Simply put, if I am purchasing a good or a services online, instead of the government deducting the tax, that particular seller is going to charge you the tax amount, and that is what is called tax collected at source. Now, there are going to be a lot of implications of this new amendment which is coming in, but first up, let's try and understand what the amendment is. First up, the rate of levy on TCS on international card spends has been increased from 5% to 20%. Secondly, earlier there was an exemption with respect to the total limit coming in to 7 lakh rupees. That too has also been abolished. That means that any spend that you're doing, even starting from $1, will attract a levy of 20% of TCS if that spend comes under the bracket of LRS or the remission scheme as well. So that's the first bit coming in. Now, with respect to this, the government has given a lot of clarifications as well, and now they're talking about rule 7 of the FEMCAT rules, wherein they said that earlier there was an exemption to the use of international credit cards from the LRS for payments by a person towards meeting expenses while such person was on a visit to outside of India, and now that exemption limit has been withdrawn. Now let's try and understand what the impact is going to be. For instance, if you were paying 1 lakh rupee while buying a foreign good, now that amount will increase and become 1,20,000, because there will be that another 20% levy which will come in, and that will be collected upfront by the seller of the goods itself. Now, this is not an additional expense coming in. Let me clarify. This is not that you're paying more amount for it, but it is a tax which is collected upfront, which you can claim refund later, but that refund will happen only by the end of the year when you file your taxes, etc. It's very similar to the way TDS works. Remember, a lot of us face the TDS which the employee cuts on a monthly basis, and at the end of the year we calculate our tax, match it with the TDS amount which has been cut already, and then either we have to pay more tax or claim a refund. In a similar way, this TCS will come in something which is called Form 26 AAC, and from there we'll have to tally whether there is a refund or a more higher tax that you need to pay out. Now, in terms of the other internals coming in, there are a lot of clarifications that we have sought to seek by speaking with a whole host of experts. First up is, how does one distinguish between business spend versus spend made for personal use? Well, it's difficult for a bank to make that distinction, right? Because you're just swiping your card. So, in that case, until unless you take a specific approval or spend that money from a current account which has been allowed to use for foreign remittances, the bank will charge you that 20% extra. Later, you can claim it from your employee, etc. But for now, that would be considered as part of the normal expenditure, and 20% levy will be attracted on that. The second question that people are asking is, what about my subscription amounts? What about the money that I pay to, let's say, a Google or a YouTube or a Netflix, etc.? Now, there also the experts tell us, since there is a foreign currency involved and there is a conversion that takes place, this too will come under the ambit of 20% levy, and there is no threshold to it. Even the spend of $1 will start attracting this particular levy. We asked the experts what happens if we are making the tour purchases or let's say a flight purchase in India from a domestic aggregator. Then you are paying it in rupees, right? No, you are mistaken there. Even then, you will be attracted to that 20% levy coming in, because ultimately there is a conversion happening at the aggregator front. So, if today I go to, let's say, a Yatra or a Make My Money trip, etc., Make My Trip, etc., to buy that ticket, there will be an additional levy of 20% there as well, because that exemption of 7 lakh rupees has been removed. Separately, we also tried to understand if, is it easier if I use, let's say, my debit card or a forex card, or maybe just convert cash and carry, where all of this is at par at the moment. So, there is no distinction whether you make the payments out of credit card or debit card. There could be individual banking and merchant charges, etc., which might be different, but with respect to this TCS levy coming in, it's pretty much same across the board. So there's no choice but to pay that additional levy as well. Separately, there is a exemption limit when it comes to educational expenses as well as medical expenses, but that limit is capped at just around 7 lakh rupees. We also tried to understand, what will happen if, there is any sort of rollback, etc. But for now, the experts are not talking about whether there could be a rollback or not. So this is the key takeaway with respect to TCS of why is it levied, and the government is saying they have levied it because they want to expand the network. They want to make sure that high earning individuals are within the tax bracket, and this is one way to kind of carry the trail and understand who are the people who are spending that much. But there's a lot of clashback, etc. happening on social media when people are calling it a bit of nuisance, people are calling it an additional levy, because there was already a credit card trail available. So why is the government increasing that particular amount from 5% to 20%? So while public is at arms against this view, the government maintains the view that this is going to expand the tax network, and the people who are evading the taxes in an illegal way will come under the ambit. So that's the sub and substance of this TCS levy increasing to 20% level.